Today we're looking at why Bitcoin and Wall Street are both under pressure right now, and what it could mean for the crypto market going forward. Recent economic data from the United States triggered a wave of selling across both traditional markets and crypto. According to reports, the U.S. economy lost about 92,000 jobs, which caught investors by surprise and increased concerns about the strength of the economy. When unexpected economic data like this appears, markets tend to move quickly. Stocks dropped, risk assets pulled back, and Bitcoin also saw downward pressure. Bitcoin briefly fell below the $70,000 level during the sell-off, showing that even the largest cryptocurrency is still closely connected to broader financial markets. This highlights something important for investors to understand. Even though Bitcoin is often described as a hedge against traditional finance, in the short term it can still behave like a risk asset. When investors become nervous about the economy, they sometimes reduce exposure across many markets at the same time, including crypto. However, there are two different forces at work in the market right now. On one side, macroeconomic concerns like job data and interest rate expectations can create short-term volatility. On the other side, long-term fundamentals for Bitcoin continue to strengthen. Institutional investors are still showing strong interest in crypto markets. In fact, Bitcoin exchange-traded funds in the United States have already seen more than $1 billion in inflows recently, suggesting that larger investors are still accumulating positions. At the same time, global geopolitical tensions are also affecting markets. Recent developments involving the United States and Iran have increased uncertainty across financial markets. Bitcoin initially dropped sharply during the news, falling to around $63,000 before rebounding toward the mid-$60,000 range within a day. This type of volatility is not unusual during geopolitical events. Because crypto trades 24 hours a day, it often reacts faster than traditional markets when major news breaks. Interestingly, some analysts believe that extended geopolitical instability could actually benefit Bitcoin over the longer term. In periods of global uncertainty, investors sometimes look for alternative stores of value outside traditional financial systems. So while short-term volatility can be intense, many long-term investors still view Bitcoin as part of a broader shift toward digital assets. Before we continue, real quick. If you're investing in crypto, one of the most important things to think about is security. Many investors are now using the Best Wallet app as a way to store and manage their digital assets while maintaining control of their private keys. Instead of leaving funds on exchanges, self-custody wallets allow you to control your own crypto directly. The Best Wallet app also supports multiple assets and is designed to make managing crypto simple while keeping security a priority. If you want to check it out, you can find the Best Wallet link in the description or the pinned comment. Now let's get back to the market situation. What we're seeing right now is a combination of economic uncertainty, geopolitical headlines, and investor positioning. When markets receive unexpected data, the first reaction is often a broad sell-off. But once investors reassess the situation, assets like Bitcoin often stabilize and begin to recover as long-term buyers step in. Another factor worth mentioning is that new projects and pre-sales continue to attract attention in the crypto space. One project currently generating interest is Doge, which is running a pre-sale and has already raised several $1 million according to its website. The token is currently priced at around $0.00028 per token during the pre-sale phase. Doge positions itself as a meme-driven crypto project aimed at the high-energy culture of crypto trading communities. Like many early-stage projects, a significant portion of the supply is allocated toward marketing and ecosystem development to help build early momentum. Of course, pre-sales and meme coins carry higher risk compared to established cryptocurrencies like Bitcoin or Ethereum, so anyone exploring opportunities like this should always do their own research. If you want to learn more about the Doge pre-sale, you can find the link in the description. So what should investors take away from all of this? First, Bitcoin is still influenced by broader macroeconomic conditions like employment data, interest rates, and global events. Second, short-term volatility does not necessarily change the long-term adoption trend for digital assets. And third, as the crypto market continues to mature, we are seeing a mix of institutional investment, geopolitical influence, and new projects all shaping the direction of the industry. For now, markets will be watching upcoming economic data and geopolitical developments closely to see whether risk appetite returns or volatility continues. If you want to stay updated on the biggest crypto news and market developments, make sure to subscribe and turn on notifications. And let me know in the comments what you think. Do you believe Bitcoin will continue to follow traditional markets during economic uncertainty, or do you think crypto will eventually move independently? Thanks for watching.